Hello, everybody. This is Jake Stenziano, host of Jake and Gino podcast, here with my co-host, the multifamily mentor, the coach of chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Jake, I'm doing good. And you know why I know this is going to be an awesome show? Do you know why?
Because I think there's a contradiction coming. Hit me.
You got the pink shirt on. Every time you show up in pink, you just crush it. I mean, pink goes really well with your complexion, brother.
It's called salmon.
Salmon, okay.
Salmon.
Even better.
It's called salmon.
Even better.
Here we go. All right, today's guest is a CPA, a tax coach, a 17-year New York City police veteran. I don't know. Maybe. We're going to dive into this. He is also the best-selling author of Secrets of a Tax-Free Life. So without further ado, Craig Cody, welcome to the show.
Hey, guys. Thanks a lot for having me.
All right. This is what I'm trying to understand here. A cop, an accountant, come on. I like one's a nerd, and one's kind of like John Wayne here. What's going on here? You got to break this down for me because I hear the accent, so I believe you're from New York, but I'm not sure I'm buying the rest of it. So you got to at least break this down for us.
It's simple. You save somebody $50,000, $75,000, even $25,000. That's exciting. Yeah. Is it exciting chasing a perp down the streets of New York City? Yeah. But you know what? Sitting with somebody, saving them $25,000, $50,000, $75,000, that's exciting. Okay. The other stuff is for you when you're real young. Okay. I'm not chasing people anymore.
He's looking to really make a difference. It's one thing to rescue someone on the subway and save their life, but who really gives a shit about that, right? We want to save some buckos here, pal.
At the point I had a commandeer cab to go chase somebody, I knew it was time to make a change. All right.
So Craig, let's dive into that. When did you feel the need to say, this isn't for me anymore? I've outgrown it. I just don't believe it anymore. I like this accounting stuff. And how did you transition from a cop's mentality to an accountant's mentality? That's a big shift.
I mean, it's really not. It's helping people. Either way, you're helping people. It's just in a different way. Listen, my dad was a cop. I grew up like that. So, it was a 20-year retirement. So I knew I was kind of, getting on in years. It was time to start thinking about doing something else. It was a fluke thing that I kind of like got into taxes. And then I thought I was going to be a financial advisor. And I said, well, hey, let me get my CPA, because there's, million cops retire and become, brokers. I said, let me get my CPA, be a little bit different. And then I just really fell in love with tax planning and, saving people money. It's like you're putting money in their pocket.
Mm-hmm. So what did your family think? From Craig the cop to Craig the CPA?
Oh, I think they were all good with it. It was kind of like CPA with a gun. I'm in New York, so not everybody has a gun, okay? Well, not everyone has a legal gun, at least.
I think it's like different. Like there's a lot of people carry, probably the ones that shouldn't be carried are carried, right? So, yeah.
Listen, I have clients that are dentists and they carry a gun, and I'm like, I'm from New York. I'm like, what? But it's different. It's different.
So when you were doing this, I need to ask you about your relationship with money, because this is where a topic that I love. I've been writing about a topic called happy money, and people don't understand that there is happy money and unhappy money. And it seemed like you were making happy money early on in your police career, and that turned to maybe a little bit of unhappy money, and saying, you know what, I want to get on and start helping people with the planning.
It was always happy money. It was always happy money.
I've never hated money either, Gino. I've always liked money.
No, you see, you're not understanding the concept, Jake. I know it's a little bit more difficult for you, but let's say you're in a job for 10 years and you hate that job.
There's zero discrimination for me in the money. I love it all.
Yeah, but some of it's unhappy when it comes to you. And Craig, it seems as if right now he's sitting in the bosom of happy money because he's saving people money. He's creating value. And from that happiness, happy money derives from. But Craig, what was your relationship with money as a cop? Has it changed since then? I mean, because I know a lot of cops at times, blue collar, we have this middle class mindset of limiting beliefs with money. Did you have any of those?
Definitely, you paycheck to paycheck, thinking all those things, not really knowing what was out there. Okay. Mm-hmm. I really learned about money when of course I worked a second job because, couldn't live on one job with 3 kids, and I worked for a guy that did auctions for a bankruptcy trustee. And I started to see the money that was out there. Mm-hmm. Okay. That there's more than just, having a W-2 job. And, one thing led to another. I kind of fell in love with taxes. I knew, New York City, you have a 20-year retirement. So I knew that was going to come at some point. So started to plan. And like I said, I loved every day. I did a lot of great things. All right. But, there comes a time when it's time for a change. And I was young and, I was lucky enough to find something else that I really enjoyed.
Let's dive into the secrets of a tax-free life. You got to share a few of those secrets with Jake and myself, because since Jake loves happy money, he loves all money. He doesn't discriminate. So if you can get him more money, he'll be more happier.
Yeah, and I've written a couple.
Come join the team, right? I'll bring all your monies.
I've written a couple of books. The 10 biggest tax mistakes that cost business owners thousands. Okay, and a number of other books along those lines. And here's what it all comes down. There is no rocket science. Okay, people think it's there's no rocket science. Take some time, have conversations with your CPA. Okay, what can we do a little bit differently? All right. And you'll come up with all sorts of things that are legal. All right.
Mm-hmm.
You may encounter somebody that says, my head is down. I'm just pushing tax returns out the door, and you find somebody else. All right. But if you have somebody that's bright, okay, and relatively progressive, all right, have those conversations, and things will come.
So talk about some of those biggest mistakes, because I think that will really help some of the listeners. And okay, I need to avoid something like that. Give me some of those mistakes.
Well, let's think of in your world, in the real estate world. All right, there may be some low hanging fruit. People don't understand the difference between passive and active in real estate, and how many times will people come to us and they think, well, I get this K1 and it has $100,000 loss, and you have to break the news to them. You're not getting to take advantage of that. You don't lose it, but it's not going to affect your tax. So can you plan some other things where you could take advantage of that? All right.
Mm-hmm.
Do you have a business? Do you have a business? Most people, they start to build wealth from their business. They buy real estate, and then they accumulate a lot more wealth in their real estate. Can I use my first business in some way and create a passive source of income that'll then be reduced by my losses in my real estate? Like, once again, not rocket science. Take some time. We had a client years ago that they were wholesalers, and it was like a paint type of thing that they sold. They also had a counter where people would come in the back of the warehouse and buy stuff and pick it up and walk it out. We created another entity, okay, for their retail side. All right. It generated income. The owners weren't involved. It was a passive source of income, and it offset the passive losses. So it was a win-win for everybody. How can you not like that?
I'm just trying to think of the real estate investors out there. You talk about the cost segregation. Do you do any type of estate planning? Because I'm sure that coincides with a lot of the tax planning. Let's dive into that, because I love that topic.
We do estate planning, and once again, it's like, okay, what can we do a little bit different? All right, take some time, see what's going on, what strategies. We have limited partnerships and the whole deal that goes along with that. But you mentioned cost segregation. Okay, you'd be shocked how many people, have heard of it. They don't take advantage of it. And they can take advantage of it. All right. So once again, that's somebody typically that either has a lot of real estate that's generating income, or they have a business that they can take advantage of. All right.
When you work with people, what are some of the things that someone should be looking for when they're talking to a CPA? I mean, you say have those conversations. If I'm new to the business, I don't even know what I should be looking for in a Craig Cody. What are some of the characteristics that you need to have to be able to help me as an investor?
You want somebody that can basically think and have a conversation, and is not going to have their head down and just looking at doing tax returns all year round. Okay. So, and let's face it, if you see your accountant once a year and it's in March or April, all right, more than likely, they don't have time to do any kind of planning. It's like they're just trying to get stuff out the door. All right. Mm-hmm. So you're behind the eight ball to begin with.
They're rubber stamping it as they go. And I think this is true for any business, any organization that you want to produce. We call it a cadence of accountability. And I think that's where you're going with this, Craig. Maybe detail the schedule and the planning that it takes to actually be effective from a tax planning perspective. As you, the guider, the guidance counselor, essentially, what should that cadence and schedule look like? And then, give us a real life example of what that looks like.
So with our clients, okay, we're meeting with them once a month. All right. We're having a Zoom meeting with them. All right. We're going through their P&L and stuff like that. We're looking at strategies. We're looking, most people talk, excuse me, Most people talk about projections in the fourth quarter. Okay, you talk to most CPAs. Projections is okay, Johnny. You know what? You're going to have to make an extra $30,000 payment by January 15th. Okay, that's not tax planning, right? We're looking at a projection. We're saying, okay, yep, you made a lot more money this year. What can we do differently? What options do we have available us to reduce that? Okay,
Tools
can
in
we
the
move
belt
money?
instead of reactionary.
Exactly. So you're taking the time. So in our case, we're meeting monthly. So we're reviewing financials. We're getting on with the client. We're walking them through. We have a number of different reports we use depending on what type of industry they're in. But just by having the conversation, all right, things happen. All right. You get more information. I remember having a conversation many, many years ago. Client said, oh, yeah, we sold our building. Okay. And we're going to 1031 into our primary residence. I'm like, no, you can't do that. Okay. So, by having a conversation all the time before they get to sell the building, you're having that conversation. All right. And if
But
there's
also the
something that they
picture's
think is wrong,
building. If there's a sale that took place, if the revenue's increasing, if the revenue's decreasing, you're getting a picture that's somewhat up to date so that you can make plans accordingly. Is that what I'm hearing?
Exactly. Nothing's after the fact. Like I tell clients of ours, okay, yeah, your tax return, you're going on extension, but you know what? In December, you're going to know what your liability is. Right? No surprises. How many times do we hear where people, my guy told me I owe $50,000 and it's like the day before, like, there's mutual responsibility when it comes to that kind of stuff. It's not just the accountant. Okay. It's
Think of the
people
stress
not
though,
having-
right? If you're waiting until the tax return to find out the magic number, good or bad, there's stress, unnecessary anxiety around that. It's unprofessional. It's just there's so much bad, to have that once a year meeting to find out what the number is going to be, right? You don't want to do that. That's silly to me.
It's a bad way to do business on both ends. Yeah. Okay.
But it happens more often than not, though. That's the reality of it.
95% of the time, if not higher, it happens. Okay.
Craig, you're talking about these monthly meetings. They shouldn't take any longer than 30 minutes. I'm just, people may be on here going, oh my gosh, this monthly meeting, how long is it going to take? I mean, 30 minutes to go over.
On average, they're 30 minutes. They could take 15 minutes. Maybe they'll take an hour. Depends on what's going on. Are we thinking about buying something new? What are we thinking about doing? Are we thinking about selling something? Okay. What kind of tax liability are we going to have? It really depends. But, and listen, they're done over Zoom. Okay. So you're not driving. No one's getting in the car and driving across town or anything like that. So how long does it take you to pop on your Zoom? Right. I mean, you could 12 o'clock, have a sandwich, 12:20, be on a Zoom, 1 o'clock, be back to doing whatever it is you were doing, right? It's not like the old days.
And so you're talking that's the monthly cadence as far as monthly Zooms. Do you do anything differently? It's quarterly meetings, biannual? I mean, what else does that look like?
Very rarely do we have quarterly meetings with anybody, all right? It's just, it doesn't work with the way we do business, all right? And we have found, okay, that the best way to do it is a monthly meeting.
Did you start out like that, Craig? Because I think, to your point that 95% of the people are just, waiting for the jack in the box to see what happens. Talk about the evolution of that.
We started out that way, except the only difference was I was in my car, okay, and I was driving somewhere, all right?
You'd go to meet all the clients in person.
That was crazy. That was probably in the late 90s, probably 8 or 9 years ago, that all stopped.
So were you double dipping at that point, or were you already out of the police force at that point?
I was out.
You're out.
Yeah. I've been out 23 years. So thank you, New York City. But yeah, it's got to happen. Okay. It was, I guess, maybe the firm I initially worked for, they billed on a monthly basis. So kind of that was in the back of my mind. They didn't meet with their clients. Okay. But they billed on a monthly basis. I mean, back in the old days, the old accountant would come in. First thing he'd do is take out the checkbook. First check he wrote was his own. Okay. And he'd do that every month.
Pay yourself first.
So that's right.
For him.
Right. Exactly. That was the old days. So, but yeah, we've always been on a monthly cadence. All right. And we find when we're not on a monthly cadence, that's when things happen. So,
Wow. And how have you seen over the last several years tax code or tax law change more favorably, less favorably for investors?
if you plan, it's more favorable. If you don't plan, it's less favorable.
Mm-hmm.
All right. So there are different things, that happen that if you don't plan, like let's think about qualified business income deduction. All right. And that's this 20% deduction you get for certain types of businesses, and it's limited to certain things and so on. So, you depending on what industry you're in, if you're not planning for that, you can, we had somebody come to us, they lost a $300,000 deduction.
Wow.
That's a lot of money, 37% for figure the numbers out. Okay. And that's just, it's 100 grand. So a little bit of planning, some things that they could have done. No, once again, we're not talking rocket science.
Mm-hmm. Let's talk about the estate planning apocalypse that's about to occur that most people don't know about because it's real. And if you've got significant assets, you're going to be losing a lot of, I guess, the exemption amount. Let's dive into that real quick.
You're talking about the reduction of the exemption limitation? Yes. Yeah.
Yes. Yes.
I mean, I don't recall when the last time this happened, but there was a point, it was probably 7 or 8 years ago. And I remember this woman was sharp as a tack. She was about 92 years old. And we signed documents on December 31st, okay, because she was not giving money to the government, okay? It was interesting because the person that she was inheriting her estate, okay, basically she'd send them out to get milk and eggs and stuff like that, and she wanted the 35 cents change. Meanwhile, she was leaving $3.5 million to them, all right? So,
Hey, you got to earn it, right, Craig?
yeah, that's right. Exactly. But you need to do the planning. If that's your, listen, if you have an estate like that and you're not doing planning, shame on you. Okay. Nobody here is in a vacuum. Okay. If you've been around long enough to amass that kind of wealth and you're not doing something about it, that's your fault. Whether you're a CPA is complicit or not, it's your fault. All right.
Mm-hmm.
You need to take some kind of action. There's enough people out there like me that'll be more than happy to help you save a lot of money. All right. You need to take some action.
So, Craig, but the exemption is going down from what, $13.5 million per spouse to what? I mean, like,
So
let's
I
go
think
through
it's
the numbers.
$5 million. It's like $5 million. Okay. So think of that. That's, tax wise, that's $3 million per. All right.
Yes. Yes.
Cash, so that you're not, and, if you're illiquid, okay.
Yes.
And now you have these properties that you got to cash out, and basically you have like 9 months, I think it is, or 7 months to make that payment. What are you doing? You're selling fire sale, all right?
Mm-hmm.
And it happens. It happens. So take the time, do some planning. Listen, we see all sorts of planning. We see planning that is way over the top. For people, you have a couple of rental properties, and they got like 10 different things going on and structures that are super convoluted. Okay. Those kind of things, they get a little bit out of hand because compliance wise, it takes a lot of work. And what's you look at the, the juice and the squeeze. What do I need to do? Okay. But, if you're in that 5+ million, okay, less than that, but if you're in that, there's a lot of different structures you can use and things that you can do to limit the liability and, keep more of what you're making, or make sure your heirs are going to get to keep it. Okay. And not have a fire sale.
But Craig, let's dispel the notion that even if you have one rental home and $30,000 in the bank, you should still have an estate plan, because when you pass away, you don't want to leave anyone a nightmare. You don't want to go into probate. There's so many other benefits and reasons why you should have an estate plan for your legacy, correct?
And that's basic planning that you can do that's not going to be expensive, okay? Like just say New York, okay? And New York's not the only state, all right? 2 or 3 years in probate for basic stuff, okay? And that's somebody with a will, okay? That's with a will, okay? And what's happening with that piece of rental real estate during that period of time, there's a million things that can be going on. And then not to, we have one right now where basically they did some planning. They weren't a client of ours. They came to us after the death. They did some planning, and now they have the other half of the family is making claims, and it's holding the whole thing up. So they did some basic planning. There was enough there to do some, better type of planning. So, we don't want that ex-spouse or whatever it is. We don't want somebody else saying, hey, you know what? I deserve a piece of this. All right.
Mm-hmm.
And if it's big enough, somebody's going to come and ask for a piece of it. All right.
Mm-hmm.
And we want to do what we can to limit what they can, anyone can ask. Okay. Anyone can ask, but let's just do it so they could ask and they're not getting.
Think about this for a second. You live to 80 years old. You're in New York. You don't do the planning for this, right? Your kids are going to be spending 3% of their life tied up in probate. That's gross, guys. 3% is not insignificant. So 3% by not planning, this is the key to this podcast. By not planning, you're passing on 3% of hell to your kids. 3% of their life will be spent in hell dealing with probate bullshit. Not to mention your death and all the other stuff. That's a significant burden to be put on someone else.
And who wants to do that? Nobody wants
Nobody.
to. Nobody's volunteering to be that person that has to go through that. Everyone has a life. They like the money, but they don't want to have to go through that. And then that extends the period of time that it goes. Do it right. Do your planning correctly. Set it up so that, if we could get everything into, the most, economical transfer of assets, that's what we want to do. All right. Mm-hmm. Because then you can go ahead and do what you want to do. Right.
Leave them a benefit, not a burden.
Right.
I like that.
Too often there's a big burden that's left.
Yeah.
Wow. Craig, before we go to the short answers, last long answer question. I don't want you to throw CPAs under the bus, but what have you seen from other clients that come on board from you and some of those horrendous mistakes that you see on tax returns that maybe someone who's listening to this can look at their return and go, that don't look right. Let me get over to Craig.
We see so many, somebody made a mistake 3 years ago, okay? Whether it's checking a box or not checking a box or whatever it was, and that mistake keeps rolling forward. Nobody really taking the time to see, okay, look at the real numbers, right? Because if you get your head down, okay, those mistakes are going to happen. So not a thorough review and mistakes rolling from 1 year to the next, okay? We talked about qualified business income. I can't tell you how many times I've seen people where there's two different. There's a qualified business income and there's specified service. Okay. And, most of the people listen to here are not going to be specified service, but somewhere somebody checked that box and it keeps rolling and rolling and rolling. All right. Mm-hmm. We just had one that was basically mending 2 years returns. They're getting $70,000 back. Okay, wow. Because that's a lot of money.
The cost seg. I think a lot of CPAs don't understand the benefits of cost segregation. They say it's too expensive. It's not going to be benefit to you. And I think that's one that I think every real estate investor should actually take a look at and go to a qualified person who can do an engineered cost study plan for you.
Right. Typically you get that analysis done for nothing. They'll come back and they'll say, okay, your first CS savings is whatever it is, $400,000. Okay. Mm-hmm. Okay. Yeah. So, and I've heard that, well, I'm going to get that anyway. Well, do I want the money today or do I want it over the next 27 years? I'll take it today.
Uh-huh.
Right.
Always take it today.
Yeah. Or then forget about when they've done renovations and stuff like that. Now it's it's even bigger. So take the time and look at that. That's low hanging, in my book, that's low hanging fruit. Okay. How do you miss that?
Mm-hmm. Mm-hmm. I agree.
All right, gang, let's take a quick time out to hear from our sponsor.
Now, we have had a great run in multifamily, going from 0 units to over $250 million in assets. That's over 2,000 apartment deals that we've been able to purchase through our framework, buy right, manage right, and finance right.
Now, Jake and we created the Jake and Gino community back in 2015. We launched our first book, Build Our Profits. And since then, our students have closed over 60,000 units. That's over $4 billion in assets they've been able to close over the last 6 years.
And that's why this community has been so successful. We call it results-based education, and we pour back into the community everything that we've learned on our journey from 0 to 2,000 units and all our systems and scale that we use on our very own property management and investing companies.
Jake, I love that. It's not just education, it's implementation. So what I want you to do, click on that link down below, apply to work with our team, see how we can help you on your journey in multifamily.
All right, we are back. So we did a little bit on the financial, the estate planning there in the prior segment. Where if folks are, let's just say they've built up a little bit of a portfolio, they got a couple of kids, maybe their net worth is say $3 million. They haven't done any estate planning yet. Lay out the short-term roadmap, the next 3 steps that they should take to get the ball rolling, because it's going to take some time, maybe a couple of years to get it exactly the way they want it, but lay out the action needed to get going here.
Well, my action plan is always, okay, we have a meeting and we go through everything. And then we say, okay, we need to bring an attorney in. All right. And you need to bring somebody in that's willing to work as a team. All right. Not, I'm not doing my thing.
Find your team members first.
Right. Yeah. You should have some team members that you can work with. I mean, many years ago, we picked up a very wealthy client, a lot of real estate in Manhattan.
Was it Gino?
They also
he ain't in Manhattan no more. You know why, Craig? Because he went for that tax-free Florida living, baby. That sunshine and that free money.
That's right.
Who can blame him for that? Come on. Who can blame him for that? But no protection. They had a bunch of rental properties in another state, owned individually. They were sued for a mold-induced injury. All right. There's no cap on mold. They had the umbrella. They had everything they should have. Okay. As they sold every one of these piece of junk properties, the money was going to this 400-pound woman that said she had some mold-induced injury. All right. So that's like basic stuff. What you have these rental properties. Are they protected? Is each one protected? I mean, like people think if I have an LLC, that means I have to do another tax return. No. Okay. Talk to the attorney. Let's get some stuff set up. That's basic level. And then move on to the rest of it.
Get the plan. Get the team, get the ball rolling. That's what I'm hearing.
Right. And I would say anywhere from 6 months to 2 to 3 years, depending on the size of the estate, because there's always a lot of things to do.
Okay. We talked about Florida. We're going to talk about Alabama now. All right. We're keeping it sunny today. All right. So I'm getting these letters from my bank. Gino's calling me. The accountants are saying stuff. FinCEN BOI. Okay. I mean, it sounds like it could be a foreign language. I don't know what the hell this stuff means. All I know is it sounds un-American to me. I'm like, what do you want my information for? Leave me alone. But at the end of the day, they're asking for stuff. There's penalties if you don't do it. Explain to us what this stuff is, what it means, why you got to do it, and then why the folks in Alabama that challenged it are exempt for the time being. So there's a lot there if you can unpack it.
The whole thing is a cluster. Okay.
All right. There we go. That's government for you, folks.
That's the New York answer right there. Okay.
It depends, Gino. It depends.
Exactly. No, that's my answer. It depends. But
typical CPA speak. That's why I'm picking on you.
But that's okay. I got my pocket protected. I'm okay. All right. Basically, the new rule is, okay, there's a first-time filing, and let's talk about business that have been in existence.
What is this, though? What is this? Like, let's understand what this is first.
It's basically, I believe, meant to crack down on money laundering and that type of stuff, okay? So what they want is they want you to file this form, all right? The first time you file it, let's just say your business was you were in business before January 1st. You have to the end of the year to file this one form. Not that big of a deal, okay? They want a bunch of information. Can easily be done. But then, right, anything that changes of that initial, you have 30 days to make a new filing.
Like what changes? Give me an example.
Your driver's license. Let's talk a real basic. Your driver's license expires.
So I got like 30 LLCs roughly. So my driver's license changes. I got to redo this form for 30 entities.
Right, and there's a way around that. Okay. There is a way around that. Okay, you could, if you own a bunch of different entities, you could actually get I'll call it a FinCEN number. You change it in one place and it'll go to everything.
Just tracking my ass like TSA all over again, Gino.
Oh, yeah. So but the thing is, you have 30 days to make this change. $500 a day penalty if you don't do it. All right. So if you formed one this year, okay, they gave you a break. You have 90 days to file. Nobody knows about this stuff. All right. We're rolling out a program. We're hoping.
Sounds like a money grab to me. Is this a revenue generator?
We'll see. Okay.
Yeah.
Nobody knows. We'll see when the first penalties start because it's not the IRS. All right.
Yeah.
We'll see when the first penalties start coming out.
So who is it?
It's FinCEN,
the hell's that?
Financial Crimes Enforcement Network. It's
I don't
part of the
recognize
US
your authority. Who are you?
That doesn't work, okay?
Oh, shit. I never even heard of these guys. How do I know they're real? They got IDs? What is this?
So there was a group in Alabama that took it to court. They won, and they have some kind of a stay. But you know what? Unfortunately, it only pertains to that select group. So we're all a bit screwed. We all have to do this. All right.
So the moral of the story is when you see Alabama standing up, rise with the folks and join the club because they got something going on down there.
Right. So, and it'll be interesting to see. I think most people, like, we're rolling out a program to do this. All right.
For your clients, right? Like this is
going to be for anybody. Okay. All right. We're rolling out a program, but you know what? We'd rather not have to
process this stuff.
Correct.
And so that's the other thing. It's unfortunate because it's creating a burden for the folks. Obviously, every time you're doing one of these, and look, we respect the work that you're putting in and everything, but that's a burden for us to have to pay now. So this is a hidden tax, no?
Oh, it's extra work you have to do. Now, if they said, you know what, this is filed every year with your tax return. Okay, it's another form you have to put in there. Okay. It's a little bit extra work, but it's not much.
But different agency though. That's why it's not that. Yes.
But there are forms that you could file with FinCEN when you file your return. Most good softwares have that. Okay, like you may have heard of it's an FBAR report for foreign holdings and stuff like that. You have to file
FERPTA action.
It's a little bit different, but
yeah.
But that you file with your tax return. It's an extra form. It's an extra filing, but you do it at the same time. Okay, so you know what? Now you're telling everyone, okay, if your license expired during the year. Okay, when you file your tax return, you're going to file this extra form. It's going to go to FinCEN. All right, it's not that burdensome. It's a pain in the neck, but it's not that bad. But no, this is something. So basically, you have to, especially if you own a bunch of different properties or if you have different partners and stuff like that. If anything changes in that 30-day period, okay, you need to make that amendment. Okay, it's
Craig,
crazy.
Is it the wrong mentality that I think they should be paying me for this information for this shit? Like, if you want it, like, what you gonna give me for it? All right?
I think people have kind of tried to go that route. It usually doesn't work out that well. Okay,
Gotta stand together, folks. I stand with Alabama. Let's go.
Craig, let me tell you something. To me, it's an insidious tax. There's 33 million LLCs that have to do this in this country.
And this is not, they're not making money on that? Come on, guys.
And unfortunately, it's the law. Every time the government creates something to avoid money laundering, these entities are small businesses. They're crushing small businesses once again. That's my theory. And you're making it a felony. So it's an undue burden. So to me, it's unconstitutional, but I'm not a constitutional attorney, lawyer. But to me, that's what you're going to charge.
Think about the guy that owns the laundromat that does his own taxes. He doesn't know about this fee daily or what this shit is because he's not in tune. Like, guys, what are you doing to the folks out there? It's ridiculous.
Bro. Felony.
Ridiculous.
Okay? I think Craig agrees with us, Jake.
He's like, I don't want to speak on this because I'm kind of in the club and I don't want to blackball me. I get it. I get you, Craig.
I don't know of one CPA that's looking forward to doing this and making money on it. Okay?
I'm just feeling bad for like the construction guys. They got the small office. They're trying to get through life, managing stuff, being out in the field. This is not productive, guys. We got to figure out better ways to do it.
And they're not laundering money. That's the whole entire thing. Those people are not laundering. That's what this law doesn't even pertain to them. Like, you have an asset that is less than $5 million in income. You're not the target. You go after the bigger targets.
Well, do you think the people that are laundering money are actually going to file this form?
That's what I'm saying. It's another one of those things. Yeah, if I'm a criminal, am I going to possess a gun legally? It's the same thing. That's what
exactly. So,
yeah, I love that.
Listen, a lot of us are really hoping that they decide to change this because it's just, I'd rather spend my time doing tax planning, okay, than have to take somebody's money for this kind of nonsense.
Or playing bubbles with my kids. I'm looking outside, my kid's playing bubbles outside right now. Could I be doing that? No, I'm talking FinCEN BOI. I don't even know what the hell this shit means. Anyways. All right. So obviously some folks are going to need some help with this, Craig. What's the best way for folks to get a hold of you so you can take the burden off their hands and hopefully not have them pay fines, penalties? This is like click it or ticket. How do you get folks not to get a felony? What can you do? Give me your website and how they get a hold of you.
Okay. So our website is CraigCodyandCompany.com. All right. just Google me. I'll show right up. I'll be at the top. I'm the only Craig Cody out there that's a CPA. So you'll find me. Emails
Great
Craig
Western name. I think you had a 6-shooter, right?
Yeah, out in Cody, Wyoming.
Yeah.
Emails Craig at ccodycpa.com. But go to our website. We have a couple of different things on there. You could get a copy of our book. We have a free course up there. Get some use out of it. And reach out to us if you need some help. But, we're all hoping this thing goes away because it's such a cluster.
That's what usually happens. Hey, if you need someone to represent you, Craig Cody, the fastest gun in the West, will take down FinCEN BOI for you, folks. We're doing it that way.
You heard
Gino,
that
take
here.
us home. That's right. You're up, Gino.
Jake, I'm going to wrap this up by saying that Craig Cody was a young New York City police officer running the streets of the city. Loved his job. But at one point, he's like, these knees ain't holding up, man. I got to do something different. I'm getting too old for this gig. Yeah, he's got him too old for this gig. I can't keep running around, but I love that money. Like Johnny G.
Love that
money. It's all happy money.
Keep more of what you make.
That's right. And it's amazing, the transition. I honestly have to say, I've never heard a New York City police officer become a certified public accountant. And the transition has been pretty amazing because you're out there helping regular, everyday people save money. You're helping them avoid taxes, not evade taxes. That's the difference. The 2 books he's written, Secrets of a Tax-Free Life and the 10 Biggest Tax Mistake Benefits. Got to go pick those up. And the last thing, you got to talk to Craig because you want to become a benefit to your children, not a burden to your kids. Ooh. Thanks, Craig.
Thank you, guys. Thanks a lot for having me. Great time.
Our pleasure. And gang, as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He's the G Daddy, and we make it happen. We'll see you next time.